And because of how big these companies are, basically the returns of these companies drives the entire market. One of the biggest factors that affects investing is the size of the company. And the way we measure size of the company is what we call market capitalization. And what market capitalization is a number that you derive by multiplying the price of a company but the shares that the company has issued and are trading in the market. So there are large cap companies, medium cap companies, and small cap companies. As you may guess, companies like Apple, Facebook, and Google are huge, and they are actually mega caps, which is even larger than the large cap. There are medium companies and there are small companies. There are few reasons that you care about the size of the company. First of all, when we look at the market, what we consider market is a slice of the market. And when the people who put together the benchmarks that measure the market, they look at the size of the company. So if you look at S&P 500, they are some of the largest stocks in the market. And because of how big these companies are, basically the returns of these companies drives the entire market. So that's why you could be invested in the biggest companies and you could get a pretty decent return and do pretty well when the markets are going up. But there is an aspect of small cap, smaller companies that every investor should be very cognizant and knowledgeable about. Small cap companies are considered very risky. But if you look at the history of the markets of a very long time, they have produced higher return for their investors than the large cap companies. It's just that these companies are harder to identify, harder to track, and harder to get excited about when companies like Apple and Facebook and Google seem to be crushing it year after year and again and again. So if you want to really be smart about your investing, you've got to look at three types of companies and make sure that you have investments in all three buckets, with the large companies comprising probably the bulk of your investments, and then supplemented by medium companies and small companies if you want to get that extra edge, if and only if your time horizon, your goals, and your risk tolerance allows you to do so. Large, small, and medium companies are the way we slice the market at the very high level. The size of the company will drive a lot of the return that you will see. Once you understand that, then you can figure out which mutual funds or which stocks you want to invest in to reach your goals. But definitely work with a financial professional if this sounds very confusing, because you want to make sure that your portfolio is actually well designed, well structured for your long-term financial and life goals.